Hey everybody, this is DayTraderRockStar, and this is a market radar for December 18th, Friday, Quadruple Witching Day. And this is coming off of a wild day today. I mean, basically, we reversed everything that we gained yesterday and more. It was a pretty bad day to, if you were looking for more upside. It couldn't get any worse. And that was kind of surprising to me. But, now we look at the charts and I could see something that I didn't really pay attention to today. I got in with the notion that, all right, we had our move. We actually looked, been tracking the market fine. We had our daily set up. We knew we were going to get that really good high probability, that daily 60 bounce, and we got that perfect. It was just perfect right back here. We moved up into the Fed number, and we expected a rally after that. We got that.
ES Tradeometer overbought.
And then we'd start off today with a little small gap up. It looks like things are going to continue, but nope, we're going right into some selling. And typically...
NQ Tradeometer overbought.
Excuse that.
YM Tradeometer overbought.
That runs, the tradeometer also runs after hours too, so it's probably, market might be moving here a little. Let me double check. And we'll get back to this. Oh, yeah, it's starting to move up here, starting to grind higher. You see that, 2025. The market really started selling off after the close today. It dropped from the close, 1600 closed. We just started dropping pretty hard right at the close, right before the minute, 2 minutes, 3 minutes before the close. We dropped off 36 down to about a 7-point drop, and we continued on here. Overall, we dropped a good 10 points fast, and that was right at the close. 10 points right at the close, give or take a couple. Now we've been kind of flatlining here, but I want to go back to what this is really telling us. All right, so we sold off all day today, and I was and sometimes in a situation like that, and you have that daily setup, you get excited about it. It looked like it had some more momentum. A lot of people were talking new highs, so I was looking at the first pullback to try to go long. And I just took a trade in the calls today, but I want to go over the rule that I broke, and I preach this every single day, and that's and I was called out today in the room. I said, why didn't I look at the 60-minute time frame? And I didn't, and I said, oh my God, I didn't really look at the 60-minute because of just the momentum portion of the trade. So here we are taking a look at that momentum portion of the trade. And right here when we opened up, you can see that the 60 is double topped up here. And we know that the 60 rotates down nice and up and down. It gives us more extended moves. And I stress so much that you try to understand that the shorter term time frames, you write down from the 1 minute to the 5 minute, and then I go to the 60, and then of course the daily. Each one has a different time frame, and each candle is going to represent that time, so things are going to be a little bit different. You're going to get bigger moves when the stochastic rotation happens and you get the momentum. For an hour move you get 6 or 7 candles, so there's a lot bigger move than a 1 minute rotation. So when we do that, have that 60-minute, that is our prime time objective. It's trying to be on the right side of the 60 because that moves the fastest. It gives us the biggest moves in the shortest amount of time. So it's important to have that on your side, and what happened today is we started off with that 60, and that's a clear, warning signal. This is a clear warning signal. It was just because of the earnings, because of the Fed increase and all the talk and stuff. I was looking to see if we're going to actually rally a little bit further. And, we just have to always focus on that discipline of, waiting for that trade to come to you, giving you the best opportunity based off, you're looking back, even a visual or statistical opportunities in the market. And you could see how important that 60-minute is. So with that said, it pulled back, and the 60 pulled back. And this is actually on the SPY, which is the tracker ETF. We look at the SPX. You can see it's not quite oversold yet. It's not quite oversold, but same situation. So great setup here on the 60, a nice move up, the Fed day rally, and then the next day we start off on an overbought level. Makes sense to see a pullback. Pullbacks happen all the time. It came out pretty severe though, and looking back at the severity of it, it's basically took Let's see, the high here was 76.72, and the high here was 76.37. Wow. So you got a little higher high, and a lower high, a lower low, excuse me. Looks like we have a lower low. The low here is 41.66, and this was 42.43. Yes. So we have what we call an outside day. It looks like also a bearish engulfing pattern, and these are typically very bearish. Usually get the follow through, but as we know, this market doesn't have that type of market memory anymore. It's we used to see this type of continuation on these reversal candles, but not anymore. It seems like the range here becomes attractive to algorithms. We could push right back up, and the machines take over again, and you move right back up into this bigger range, and they do it back and forth, back and forth. Lots of times we look at, what I look at here at this point is if we did get a reaction, what do we have? We have this upward channel still holding up pretty good. We have that daily oscillator, the stochastics here. Didn't really turn over. It didn't really get affected. There's still a big space here, and they're pointed higher. And every so often, inside this rotation between the oversold to overbought level on the daily, your other smaller time frames will be cycling. So the daily is pushing on its way up, and as that daily here takes time and takes many days to get back up into an overbought level, if that's the way we're looking at it, we'll see that 60-minute time frame cycle many times, 1, 2, maybe 3 times, just like you have down here. This is a nice downward trend, and you have a cycle once. This one actually making those lower lows on this, but when we start to establish that thing. So what we have here now is a possibility of a kind of a price divergence where the price typically will stay inside the rhythm of the stochastics. As the stochastics are making new lows, the price is making new lows. And when we stop doing that, like here we're making new highs, stochastics rotate, makes a higher low. Makes a higher low. But they're getting oversold. And that's a little bit different because we're making higher lows every time it gets oversold. Once we make a higher low and it gets oversold, that trend is about to change, and we'll start to establish that new uptrend. So you're capturing on the lower low, lower part of that new channel. That's what this could be turning into with that hourly rotating back fast. Now the hourly again on the SPX is a little bit different than the SPY. The SPY is already overextended. Right here, so we could actually see us starting moving back, move back up here. Let me just bring up another trend line. So we did break down pretty hard there. Let's see here, what do we got? Yeah, this is a little bit different. Not much going here. We kind of flushed this level. Came back strong, pushed a little higher, pulled back into it. This is what we want to see. I mean, this would be ideal, especially because I got into those calls a little bit early. Start to move off of this channel, maybe start to develop a new trend up, or we start to see some of these levels play out as we move back up. But that needs to be seen. The hourly is telling me, yeah, it's a good shot that can happen, but all bets are off going into this Friday. It's options expiration, quadruple witching. This move today could have been in reaction to that, and that the preparation of that. So tomorrow is really up in the air on the radar. Technically, I don't like that big candle, but it did put us back into an oversold on the 60, and at 5 minute, we'll just take a fast look at the 5. It's on the SPY. I'm going to bring that SPX up again. Yeah, and the 5 here pulling back. And again, we did have some pretty decent selling right at the close, so it actually brought us back down. Someone also reminded me that there is a there is a gap back here, right? What we're looking at? Was I looking at the 60 on that? It looks like that gap is coming in here right around that, give you an exact 2022 to 2025 area. 2022 on the S&P cash, going back to the 5th to 4th. It looks like the 14th, 15th. So there is a gap below us on the cash. again, there's the hourly that I think is going to be setting up tomorrow. We have quadruple witching. It's going to be a crazy out of the gate shot. Overnight markets right now, again, we sold off after the close pretty aggressively. And just to give you another look here where we are starting off. There we go. I gotta fix all these. I just restarted my charts. There was something wrong with them before. All right, so we're up $1.50. not looking at anything. And last thing we'll talk about is maybe just going into next week early. Now tomorrow's Friday. Remember, I talked about this on this last week's watch list, how important it is to be very safe trading up to Christmas, the 25th, the week before, the week going up to it. A lot of people are like saying, oh, next week we're going to have the Santa Claus rally. You have to remember that is the last days of the month, the 26th to the first couple days in January, first few days. Sometimes they say it's the second, third. Anyway, it's definitely the 26th on. So that's the Santa rally. So there's a good shot that we could actually, put a lot of fear back into this market by seeing a little further pullback. That would set us up on the hourly a little bit more. And going closer into Christmas, if we chop around, even push down a little further and kind of put a little, like I said, put a little fear in the market going into Christmas, and then see that real good, nice, Christmassy Santa Claus rally at the end of the year, as expected. We have that one trend line, a couple of trend lines on the S&P right below us. And this is a pretty big one. This is an old 1, 2, 3 pattern. You'll see it on the daily. It's a pretty nice big one. And we kind of flushed it, came back. Typically we hold it. So there's some things down here that are starting to look pretty good. But again, a lot of volatility going into this week. It was a little annoying to see the pullback today. We're not oversold on the hourly. The main issue here was not looking at the 60 and not following the 60 down. The 60 was set up. Once you got the 60 on your side and you start trading it with the 5 minute, you'll start to see that the overall trend is down. Those 5 minutes will react faster on those sell sides. And, you had a couple bounces, but there was also a couple really nice patterns that broke down on the ES, and you can see them on the 5 minute also. So a lot of things going on today. Mark that down. I'm probably going to do another specialized video just to kind of hammer that fact in. Is that 60 minute, that 5 minute, so important to have those on their side. Something I did not do today. All right, so let me start working on some other things. That's the market radar going into tomorrow, Friday. I'll be in the room early. Paul will be on the mic. And again, I kind of feel like we could pull back before Christmas, rally after Christmas. So it's good to keep that cash handy, especially after Christmas. You hate to be, being beat up here before Christmas, and then after that Christmas, it feels very good to be in the market after Christmas.